Hi everyone, welcome to today's trade of the day, and for today's trade of the day we will be looking at the pound dollar. Now the pound dollar is showing signs of reversal on the daily, and that extends to the intraday charts as well. So I'll be showing you guys how to make full use of this reversal opportunity. Now first and foremost, I just want to look at the price action that we have, right? Pound dollar actually bottomed out here recently in 18 May before making a push up to form a new high. Right, and then it made a pullback to form a higher low, and then finally recently it topped up with a higher high here, right, at the start of August. Now if we were to connect these trend lines, okay, and we can expect price to pull back down towards this trend line level, okay, to form a higher low. Now when there's a series of higher lows, this really means that the market is in an uptrend. Okay, so let's go ahead and connect the lows. Something like that, and we can use this last movement, we can use retracement for the last movement, and we see that if price really were to make a pullback and form a higher low, okay, price never moves in a straight line, it probably does a zigzag on the way down. This ascending trend line support falls in line with the 61.8 retracement. Now because this is on daily, this level is pretty far away, so I just want you guys to keep this level in mind. Okay, and I have people asking me, why does the market top out over here? Now, the clue simply lies in the graphical price by looking to the left. So if we look to the left, we actually see price topping out in this area, right? Price tested this area once as far back in January 2020, and then price tested it again, okay, in March, and recently in August, price tested this level once more. So we have these three similar levels of price testing this resistance. Now further, we also note that there is a zigzag movement, of which we can use our Fibonacci extension, okay, using this as the first point, to the second point, and to the third point. Now we see that this graphical resistance level, okay, also falls in line with the 127.2 extension level. Right, so this Fibonacci level with graphical finds confluence and gives us a strong area for a reversal. Now looking at the candlestick chart, okay, we also see that recently price has formed a bearish engulfing, and in fact this bearish engulfing is strong enough to have engulfed the past two previous sessions as well. Right, so now that we have the resistance in place, okay, let's find the daily support. Now should price actually come back down, okay, I'm not saying that price will immediately come straight down to the 61, which is the first level that price will reach. Okay, so the first level that price will reach is definitely the 23.6. Should price break below the 23.6, the next level will be the 38.2. Now I'm more inclined to take the 38.2 as a daily target because this is near the graphical overlap level, so this can be the first target, right? The first target that price will really approach, okay, in the shorter term. Okay, so now that we have the daily resistance and the daily support, let's quickly go down to the 4 hours. So this is what we have on the 4 hours. Let me just tidy up this chart. Okay, I just want to point this out. I can remove the trend line because it's a bit too far away. Okay, now firstly, we see that there is a sort of a graphical support level over here, right? That's one level. I will get to that level later, but we also see that price has sort of made I would call this a possible head and shoulders pattern. Right, there is a strong preceding trend upwards, followed by a pullback into a left shoulder, and then followed by price making a higher peak. Okay, that's the head, and then it goes down, and then price makes a right shoulder. So this could very well be a head and shoulders pattern. Now we also see this price making a zigzag. All right, so we can use Fibonacci extension, follow the zigzag 0.1, 0.2 to 0.3, and we can open up all key Fibonacci levels. And we also see that the 100%, okay, actually falls in line with the 23.6. Right, so let's highlight the 100% first. Okay, and the 23.6, and let's put another target level over here in this area. Okay, so we have the first target, we have the longer term target as well. Okay, so let me just back it up to put it in line. All right, I'll remove this arrow. Just remember that our bias on the daily and even on the 4-hour is bearish. Okay, so first and foremost, okay, we can actually connect these two highs, right, with a trend line, something like that, okay, to show that if anything, okay, price could very well from here just make a straight drop down towards the first target before going towards our final target. Otherwise, price could also make a pullback, all right, and then come straight down to our first target. Now the first target makes sense because if this is a inverse, if this is a head and shoulders pattern, this would then be the head and shoulders neckline area. Okay, so very quickly, let's go down to the 1 hour. Okay, so we have the 1 hour chart here. I just want to tidy things up again. Okay, with a strong focus on the more recent prices. Okay, so price is clearly in a sort of a downtrend, right? Remember, price made a high, price made a low, okay, price made a lower high, and price has made a lower low. Okay, so what we can expect price to do is to come back, make a lower high before pushing back down. Okay, so I just want to show you guys we can actually use a Fibonacci of the last retracement of the last movement from the high to the low, open up all key Fibonacci ratios. Once again, we see that this target zone that we have is really a key area, right? There's the 23.6 long term, there's a 100% extension from the recent high, and there's a negative 61.8 level. Okay, so this is clearly a strong support level, right? Okay, so we also see that the 61.8 retracement really falls in line with the descending trend line support resistance. Okay, so I'm just going to go ahead and just highlight the 61.8 and the negative 61.8. Now, now that I have the key levels in line, some of you will ask how I can play the trade. Alright, there are really two levels of playing this. The first level is you guys can actually wait for price to come back to the 61.8. Okay, and this can actually be your sell entry, right? And then you ask me where would the stop loss be? My stop loss will be at the recent swing high. Now, why will the stop loss be at this area? Let me explain it to you guys. Firstly, if price breaks above the trend line, right, and it goes even higher, price would have closed out, okay, way above the trend line. Now, once price has broken a trend line, it means that price is no longer in a downtrend, firstly. Secondly, if price is above the stop loss, which is linked to the recent swing high, okay, it would then also mean that price has formed a higher high. So this also invalidates the bearish idea. So for these two reasons, okay, we put our stop loss at that level. Right, so we can wait for price to come to the 61.8 before going short. That's the first entry. Now, for those of you who are not high risk lovers, okay, you don't want to wait for price to pull back all the way up, because if you think price pulls back all the way up, there's a greater possibility for price to change trend direction. Then you might want to wait for a confirmation. Okay, so this can be your sell entry, okay, for the low risk people. So this level here at a 130.19 becomes sort of a confirmation level. Confirmation in the sense that if price breaks below, okay, price would have surpassed the recent lows, all right, and this gives you greater confidence that price will go all the way down to your target price. Now, of course, if you wait for the low risk entry, your reward will also be lower. All right, so I'm keeping this this alternate level here as well. Reason for this is because just want you guys to be able to understand that when doing an analysis, you need to really consider the alternative scenario. Should price break above the and close above the stop loss, that means our bearish idea has been invalidated. Price will naturally resume its upwards move and push towards the recent high and go towards our daily target. Right, so that's all the time that we have for today's trade of the day. I hope this has been an informative session with you guys. Please do your own due diligence, and I'll catch you guys tomorrow. Take care.